Alright, so the stream is starting. We're recording live. Let's wait for a few people to join first before we're going to get into the details of today. Let me put that on my different screen. Yep, right here. Alright, the stream started already. Let me make sure I give everyone a heads up. So earlier this morning I wasn't able to means earlier this morning. Yeah, but earlier this morning I was not able to trade do a live stream for the New York AM session because I had some things to sort out. And yeah, now I'm gonna do a little recap also for my training purpose. See what we could have gotten. I didn't look at any of the price action post or pre-New York Open. So right here inside the VIP chat, that's the last time where I shared something right here. It's either an expansion day to the downside, and we hit the previous day's low. Let me put that to the side. And we hit the previous day's low, or we reverse from the low of day around 9:30 a.m. with a bullish 2022 model. But right now we're kind of in the middle of nowhere before we hit the previous day's low. So that happened at, when did I publish that? At 30 minutes before the New York Open. I published this chart where we saw that we closed on the hourly time frame below the 1 hour fair value gap low. We already look like that's not going to work. We're not going to see an Asia buy side reversal. Well, at least from my gut feeling, NQ also looked a lot weaker. And that's why I mentioned we're kind of in the middle of nowhere here. Of course, we could see a bounce with a 2022 model that might be worthwhile taking, but my eyes are focused on the previous day's low. So, Kita, if you have any questions, feel free to ask. And also for everyone watching on YouTube. Let's see how many people attend during a PM session. Be interested to know that. Anyway, we get started. It's pretty late and most people already likely have called it a day, but still I think it might be interesting to take a look at what we could anticipate from what I missed basically. Can you request a payout at the 5th after the trade day? Depends on which prop firm you're with. Which prop firm are you with? Apex. Apex has a specific withdrawal window at the 5th after the trade day. I don't think so. You would have to wait for the next window to open up. So you need 10 minimum trading days after you receive your funded account, and then you can request your payout for the end of the month, during the mid of the month. So if you want to get paid out for mid of the month, December, you have to request a payout before the 1st of December. And if you want to get your payout for the end of December into the new year, you want to make sure you request your payout middle of December. Always that 2-week timing window. All right, so let's see. Head over to TradingView. The time is 9:15. So roughly where we left it off. We have the previous day's low coming in here. I'm already in replay mode. We have a new week opening gap from last week, and we are below that right now. 5-minute time frame. Let's watch the New York Open on the 1-minute time frame. We have our drawn liquidity being the previous day slow. We're not very far away from that. That's only less than 5 points. So let's see if we can hit that. We just reacted off a bearish value gap here. That's 913. Let's keep an eye on that and see how we continue. 920. Let me hide the ICT. ICT all-in-one, it doesn't work in replay mode. It's too heavy for TradingView to load all that data. Next bearish value gap, we keep on going lower. Let's wait for the New York Open though. Grab our previous day slow. So an entry anywhere around here, this being our drawn liquidity, 830, 830, 830, we opened up at 830, and then from here on we just started selling off, respecting every bearish value gap that we have left behind. All right, 924, we're not far away from the previous day slow anymore. 925, bearish volume imbalance, leaving behind a new bearish value gap. So let's see if we use that lowest bearish inefficiency on a 1-minute time frame at 926 to deliver lower. 927, 928, interesting. So at 928, we gap above the consequent encouragement of this bearish value gap. We have another bearish value gap coming in right here. All right, now it is 929. We closed right at the high of this bearish value gap, and we already invalidated this one. So let's see, at this point in time, we could look at this as potential engineered liquidity. So potential sell side liquidity down here. And if we move away from our previous day slow, which should be the drawn liquidity for the New York AM session, after we've already seen the move to the downside, like I mentioned on Discord, here in the VIP chat, it's either an expansion day to the downside and we hit the previous day slow, or we reverse from the low of day around 9:30 AM. Still being in the middle of nowhere, but right now we're only a couple of points away from the previous day slow. So we're either gonna reverse from here, but I think eventually we're gonna hit that previous day slow. So 9:30 opens up. We hold support on our lowest inversion fair value gap, the only inversion fair value gap we have. Close above the consequent encouragement here. And right now we're inside this bearish fair value gap that has been used as resistance before. That next candle, immediate rebalance or rebalances the 9:30 candle, not leaving behind a bullish value gap here. Opens up with a bullish volume imbalance. And, well, shift structure right here, market structure shift bullish. Could be a potential setup. We have yet another inversion fair value gap right here. And we just keep on expanding. So right here, a short-term high, we closed above that. Short-term high cleared, closed above the 50%. Immediately continued up higher. Next short-term high right here. So let's actually take a look. Since we're moving away from our drawn liquidity, where we could be moving towards 50% of this range. The only inversion fair value gap we could really use would be the one right here. So old support turn into resistance. Let's see if we have anything on the 15. On the 15 we have a inversion fair value gap down here. I like the higher time frame one just as a reference point. Now we already reached that. Let's go to the 1 minute. So the short-term high has been cleared. Another inversion fair value gap right here. Let's see. We just keep on going higher, filling in all these inefficiencies. Another short-term high right here. This could be the next draw, but so far no easy entry out of you jumping in with the market. So let's see. We left behind our first and highest bullish fair value gap. If we want to continue into our 15-minute bearish fair value gap right here, or inversion fair value gap, take out more short-term highs, I would expect a quick bounce of this area into that short-term high for a quick scalp. Risk 2.5 points. Gonna place one entry right here just to make sure I get filled, because I can't place a limit order. My stop loss is gonna be right here at this low, and my take profit target is gonna be, let's do the consequent encouragement of our 15-minute fair value gap inversion. Alright, so we tapped our bullish fair value gap, kind of in a way here, but we keep going anyway. So we kept respecting that bullish fair value gap. Let's see if order flow can continue to the upside. Interesting. So now here we have a unfilled bullish volume imbalance. Bullish what now? Volume imbalance. We have buy side. Okay, let's see. Okay, now we have relative equal highs. We took out this high right here. I still think we could make it to here, but initially price might want to come back to the unfilled volume imbalance, because we always do that. So let's see. Leaving behind 1, 2, 3 equal highs now. We didn't fill the unfilled volume imbalance yet. No, we did. And we immediately rejected from that area. So let's see. If I could have placed a limit order, I would have certainly in that volume imbalance to add to the position. And look what we used. We had 1, 2, 3 equal highs above, 4 equal highs actually. We already kept holding support on that highest bullish fair value gap. Didn't retrace back into a potential breaker block down here. Kept holding support on that volume imbalance. If I would have seen the close below here, I would have taken off some risk. But unfortunately, I'm not able to place limit orders here yet with TradingView. Maybe in the future. So we're moving further and further away from our previous day's low. But now we're inside, or right at the consequent encouragement of our 8 a.m. high, all the way down to our 9:30 a.m. low. Right at that consequent encouragement, and also inside our 15-minute inversion fair value gap to the left. Alright, so we got filled on that buy. Let's get rid of that. We took out short-term highs. We filled in this entire inversion fair value gap. So let's see, we have another unfilled volume imbalance above here. Bearish fair value gap and bearish fair value gap right there. And another short-term high right here and right here. Let's use this one and see if bullish order flow is strong enough to continue here. We don't have any new fair value gaps to use, so one entry right here, the other entry right here. Let's see if we would have hit 5 points from that potential entry right here. Stop loss 1 tick below this low. 5 points would be all the way up here. So I would still be in this trade with my stop at break even. And there we go. From the volume imbalance entry, 5 points target, we just hit that. We're still respecting that 15-minute inversion, so let's see if that keeps on continuing. Now we're leaving behind a new bullish fair value gap right here. And if you just joined in, I'm just recapping the price action on a 1-minute time frame, because I didn't have the time to attend to the New York IEM session, so for a little bit of practice and educational purpose, I'm doing that. Alright, so volume imbalance right here, bullish fair value gap, We keep on pushing higher. That's something else we can note. So we push higher, leave a down closing candle, push above that, hold support. We push above that. We hold support on that previous down closing candle. We push above that, paired with a bullish value gap. Let's see, we closed above our, but we're right at the 50% and we already had the long of our highest bullish value gap right here, chasing momentum. And then the long entry that we couldn't take with the market order right here, well, we could have, of this unfilled volume imbalance, and they always get filled. And especially when we see equal highs being left behind, we tap that volume imbalance and we run it. Little bit hesitant to get in on this one because 1 push, 2 push, 3 push, and that's the 4th push. Already a little bit overextended. Let's see. So we hit the fair value gap. We move away from it. Hang on, let me get rid of the paintbrush. All right, interesting. So we are closing right at the low of this fair value gap. Let's assume we would have gotten into that. Stop loss for me, 1 tick below this low, but this would already be a pretty big stop loss and our target. Now 5 points would be too far away. I wouldn't take that. Already moved nicely. We captured 5 points from right here into our high of the 15-minute inversion fair value gap from Friday as a reference point. I wanted a reference point right around the 50% level, the consequent encouragement of this entire high at 8 a.m. to the 9:30 a.m. low. So let's see, a potential market structure shift would come in if we manage to close below this low. All right, we open with a volume imbalance, but we immediately close it back in. Still holding support. All right, we took out the short-term high one more time. So we've been forming these higher highs and higher lows, holding this bullish value gap. I didn't want to take this trade because already pretty extended and we already made a decent profit. So let's see if our 5-point target on this one would have been hit or if the gut feeling of mine would have been right. All right, we took that high. Could see potential support on this inversion, but our market structure shift level, don't want to forget that. My eyes are still on the previous day's low. We got our reversal away from it. I look at this as engineered liquidity. Instead of taking it right away, we move away from it, trapping longs into the market. Eventually, we're right around that 50%. So we either gonna go back up and fill these unfilled inefficiencies, or we shift structure and take out the previous day's low. And this is, well, I don't know, previous day's low. We don't have to take it, of course, but come on, like, that's a pretty good draw on liquidity. So let's see what we get. We continue. We close back below this tiny little inversion. Still holding support on that bullish. All right, here we get our structure shift. Let's enter with the market here, just to make sure that we get our fill after taking this short-term high. Short-term high cleared. So that long obviously wouldn't have worked. All right, we immediately continue lower. Now we have the structure shift confirmed right here with a candle close. Market structure shift bearish. We also already took out this low right here. So let's see if we can continue with that. We have our breaker block coming in right here at 5474 with our entry, market entry. We took the sell side. The next target would be down here, paired with this bullish fair value gap. This inversion really hasn't been used. Well, kind of, so I'm gonna leave it on here. Right now I want to focus on current price action. Let me put this up here. The short-term low has been taken. So this would be the 4-drive setup. First push, second push, third push, fourth push, actually the 5th push. And now we get the market structure shift. So I would be eyeing at least this sell side liquidity to be taken. Alright, let's see. Next candle immediately continues inside this bullish value gap now. Let's see if we can clear that sell side. My take profit target would be the drawn liquidity previous day's low. We moved away from it. We got our bearish market structure shift around to 50%. This couldn't really be better. I'm going to place my stop loss back above this 15-minute inversion fair value gap. This should be fine with the breaker block being right here where we entered. Let's see. So we take that sell side. So I'm curious to see what happened. What happened. All right, we hold support. Now we're back at the high of that fair value gap. Could look for potential resistance right here at this low and those two bearish fair value gaps. So let's see what's happening here. So we close below this bullish. That's nice, without even giving us a big retracement. Inversion fair value gap. Now we would look for potential resistance coming off this level. I won't use it as re-entry because it's too far away from the breaker block, and we already got in with the market structure shift. We continue to head lower. Inversion fair value gap right here. And we also close below that. Let me actually look at most recent fair value gaps here only. Otherwise that might be too confusing. Bullish fair value gap right here. We rejected here with this wick. Now we close below it, turning into an inversion fair value gap. So let's see. It's 10:03, so that's actually the new 10 a.m. to 11 a.m. SilverBullet timing window. We have our market structure shift pre-SilverBullet hour, so we could really look for any of these bearish PD arrays to be traded into for our drawn liquidity with engineered sell side to continue lower into that. So let's see. We close above this tiny little bearish value gap. Back above this low. So at this point in time, how did we move 5 points? Now let's see how we continue. All right, so we take out the short-term high inside our first bearish value gap now. Another wick inside our next potential SilverBullet fair value gap. Let me take a look at the 5-minute time frame here. So on the 5-minute, we also have a bearish fair value gap right here at 9:55. Like I said, we reacted bearishly off the 50% from our 9:30 to 8 a.m. range. Formed a low, high, lower low, lower high, lower low, lower high. And now we have a bearish fair value gap here lined on the 5-minute time frame as well. But we don't want this to end up as a retracement because we also have a bullish fair value gap right here. So we have to be cautious of that. And for another entry, I want to find some more confirmation. Otherwise, I accept the loss right here. So let's see. We have a new tiny little bullish fair value gap right here, but we haven't confirmed a market structure shift yet to the upside with a candle close. We still didn't. This would be the market structure shift level to the upside. And now we have equal highs inside that fair value gap. Market structure shift, short-term high cleared. Take a look at this range right here. That's also the 50% of this range. Let's take a look at the ICT fib retracement, but the other way around. 61.8 would be right at the breaker block, 50%. And also measure standard deviations to see if we might be onto something. Standard deviations. 2.5 standard deviations would deliver us perfectly into our previous day's low. I like that. and 4 standard deviations down till here. Let's see, wait for the next candle. We're still playing inside this old bullish share value gap, but we closed below and above it. I don't like that. It would be tricky. Alright, we close above it again. We could maybe be looking for a take equal highs, bearish share value gap right here sort of scenario. Keep in mind we still have that 5-minute bearish share value gap in here. We just have to manage our risk smart. So we place our limit order right here. Maybe one tick above these equal highs. Now let's leave it right here and use a... Now we can leave the stop above our initial market entry and target 10 points. So let's see. Okay, so we cleared that and we rejected. Perfect. We respected and filled in this entire 1 minute bearish share value gap. Could also be extending our old unfilled volume imbalance, but that might be too far-fetched. So let's see. No, I want to see the continuation lower, otherwise I will get out. Just as an example, out of these 2 paper trading contracts or simulation contracts. Alright, we have a down closing candle. Let's see. We only have this bullish share value gap here to worry about. I'd like to see this low being attacked next, if I'm correct about the potential 2022 setup of the 50% from our 8 to 9:30 a.m. range, with our drawn liquidity being the previous day's low. As we mentioned before I left to my meeting right here in the VIP chat, expansion day to the downside and we hit the previous day's low, or we reverse from the low of the day around 9:30 a.m. with a bullish 2022 model. But right now we're kind of in the middle of nowhere before we hit the previous day's low. And I mentioned that just right here at 9 a.m. where we continued getting very close to that previous day's low. And then we moved away from it, engineered liquidity. Now closing back below our inversion fair value gap. Be moving my stop loss above this high right here now. Minimize my risk, because I don't want us to hold support on this tiny little bullish fair value gap. I don't think we will. Keep in mind we're reacting from our bearish 5-minute fair value gap. We're inside the SilverBullet hour. Got our 2022 setup. We didn't hit the breaker block yet. So let's see. We're holding. Still holding that bullish fair value gap here at 4569 and a quarter. Okay, here goes the release. And then we finally broke it. We closed below the low. This is also a very good indication. Move our stop into profit and place our first buy limit order at the previous day's low. Nothing at risk here. Okay, so we rebalance orders. We have a bearish share value gap right here. Punch into that. So actually we could be looking, because we didn't really respect this bullish share value gap here, neither did we respect the inversion. I would be more looking at this fair value gap right here. This little bullish share value gap we kept holding twice here. Now we close below. Let's see if we can use it as resistance. Do we have anything else down here? No, only a volume imbalance. I don't want to look at this old stuff. I think drawn liquidity should be really obvious. That would have actually been nice to trade. Okay, so now we go sideways with equal lows. More equal lows. Okay, there we get the next relief. Previous day's low, not far away. And there we go. Volume imbalance, continuation lower. Let's see how many standard deviations we hit. So we reached our 3.5 to 4 standard deviations of our market structure shift level, and see how we respect that with the body. So let's see what happened from here. Okay, we took out that low one more time. We're below the previous day's low. We had our SilverBullet or /2022 model short. After we repriced back into a equilibrium or a fair price of our most recent move to the downside right here. Let's look at it on a 5-minute time frame. Can say most recent lower high, lower low. We trace to the 50%, rejected, bearish 5-minute fair value gap lining up with a 1-minute bearish market structure shift after seeing 1, 2, 3, 4, well, potentially right here. Also the first market structure shift. I didn't even notice that while replaying. I think at this point in time we were still looking for long, and we never really closed below this bullish fair value gap. We closed right at the low and had a volume imbalance, but we immediately closed that in. Then we swept a short-term high right here one last time, negating this inversion fair value gap. We didn't have a bullish fair value gap, and then we closed below, leading to our first market execution entry right here. Then we were looking for a potential turtle soup entry to sweep these equal highs, respecting bearish order flow here, because we clearly are in bearish order flow for the continuation lower. So let's see, we already hit -4 standard deviations. Did we continue lower from here, or did we move back to the upside? Let me actually see if yeah, my microphone is working. Okay, so we continue lower from here for likely 5 standard deviations. But we see sideways movement, like we went sideways here, pushed one more time lower, moved sideways. Let's see if we want to continue lower another time. Well, this is really obvious how, like, we're moving sideways, that's clear. It's 11 AM, so the SilverBullet hour would be over. Also my session for the day, 11:05, a new 5-minute candle. Leave behind a first new bullish value gap right here. We tap that bullish value gap. Let's see if we go below that. Nope, we hold support. Okay, now we went below that. No, still ended up holding. Didn't take out the low again. So we have all these short-term highs right here to the left and our equal highs right here. Break in structure, leaving behind bullish value gaps. Let's take an entry right here back into our previous day's low. Let's see if that works. All right, we fill a fair value gap lower than that. Let's try to add to the position until we invalidate it. Stop loss would be down here. Take profit target for the first contract would be the previous day's low. Okay, that doesn't work. But anyway, can't partial out here apparently. So let's put this a little bit higher. Nice, we bounce off that break in structure, bullish value gap. But we're outside the session, so I wouldn't have taken that live. Okay, we immediately retrace after sweeping buy side. Struggle a little bit to go back to the previous day's low. Bullish value gap right here. We've been respecting that. I would use that as invalidation if we close back below that to get out of the trade. Okay, so we hit that. I'm gonna sell the first contract. Move my stop to, let's put it in profit. And see if we can continue higher to know the 50% of this range, just to see or show how well a 50% mean reversion system would work. So my take profit target is going to be right here, more than 5 points. We fill this volume imbalance and keep on going higher. New bullish volume imbalance, almost hit the take profit target. Volume imbalance, we keep holding support and we hit the 50%. looking like good bullish order flow. So right here we saw sell side of the curve, buy side of the curve, and that nice sideways movement right here that looked really suspicious, especially after already reaching 4 standard deviations of our bearish market structure shift here. Yeah, let's just wrap it up. Oh wow, look how this bullish order flow kept on continuing all the way back to our 15-minute inversion fair value gap. That's crazy. So let's see where we're at right now for the PM session. That's where we're at, okay. Well, not the easiest, but well, not taking out the previous day's low kind of gave it away here. Especially if we then get the bearish market structure shift after a healthy retracement during the SilverBullet hour for a short. Let's see if we had something bearish right here. No, this is just looking like chop. Did we take out that buy side? No, we did not yet. We went clearly above the 50%, so let's take a look at this 50% level. We took sell side below the 50% and immediately moved back away. Kept holding support on these fair value gaps, but what's the time now? It's power hour, last 1 hour of the New York session, PM session. Let's take a look at the 5-minute time frame and then get down to answer some questions. Might start doing that now. If some people are watching, I haven't checked the chat yet. Yeah, well, it wasn't bad at all. I'm also surprised. It might also not be the pressure of live market conditions, you know what I mean? And you're relaxed, you have nothing to worry about. You just go with the flow and you see, yeah, price action playing out, really. I mean, we've just followed the 1-minute time frame. Looked at our most recent price leg, 50%, especially since we moved away from that 930. Okay, so where could that possibly go to? Look for the 50%. If we really show strength above that, could even see more buy side being taken for a quick recovery. But most of the time, if we reverse away before taking out our drawn liquidity, it ends up being engineered liquidity, trapping traders long. 1, 2, 3 pushes. If we take a look at the volume profile just around from this movement, we can see that most of the volume has been put in place right here. Trapping volume and traders long. Displacement, retracement, continuation lower. Perfect day for 50% pullbacks, really. Drawn liquidity, previous day's low, we mentioned that on the Discord. We took that out, continued lower. Then really that sideways movement gave it away. So right here, sideways movement, bullish value gap, but no clear break in structure. And we moved down lower one more time after exceeding 4 standard deviations. Let's see. Negative 4.5. Yep, negative 4.5 standard deviations of our displacement right up here. And then we got our first break in structure, lower low, lower high right here. Lower low, lower high, lower low. We're close above our most recent lower high, market structure shift bullish, leaving behind a inefficiency right here. We didn't respect it. So also it being past 11 a.m. wouldn't have taken that anyway, but we get the idea. This would be, let's say, the higher risk entry afterwards, seeing price continue up higher, not having taken this short-term high right here. Would have been a good giveaway to try to get long on these bullish value gaps here. This would be the first sign of bullish order flow and a potential change in the state of delivery to potentially retrace into some of the inefficiencies that we have left behind, we cut right through the previous day's low, leaving behind this bearish fair value gap. So retracing back into that after going sideways here at the low of the day, shifting structure. And then from here on, we respected every bullish fair value gap on our way back up to, yeah, well, not to buy side, to some buy side, but not this old lower high. And here, that would have been 1 a.m. PM session beginning. Oh yeah, market structure shift, volume imbalance. Yeah, not ideal. Then we gap away from that with a unfilled volume imbalance, hit the 50% of that range, immediately push back. Well, that pushback didn't do a good job on taking short-term highs. We only created more buy-side liquidity, if we're being honest. Lower high, equal highs right here at 4572. Now with equal lows. Interesting. Guys, do you have any questions regarding today's session? What trades did you take? Feel free to share it with me. I feel like I made it look too easy, but we always know it's not like that in real life market conditions. But that's a good part if we do not see the chart, and we can use the replay feature to, yeah, see if our approach would have worked. Of course, we could have been looking for longs here, and then we would have lost on that trade. But I had the draw on liquidity being the previous day's low in mind, seeing that we shifted market structure, not just market structure, also the change in state of delivery on the 1 minute time frame. After pushing once, twice, 3, 4, 5 times to the upside. But I hope you get the idea that after pushing, so we got in long on this first bullish value gap, that first push, very common. Then that third push of this unfilled volume imbalance with equal highs above, we also entered on that. Also higher probability, but getting in on that fifth push, I guess it works sometimes. But that's why we decided not to get in up on here. Then we get the market structure shift displacement, run away from that, retrace to the 50%. Right here. Where is it gone? Right here, 50%. Right there, retrace to the 50%, never close above, have our bearish value gap right here, overlapping with a 5 minute. Where are we at? 5 minute bearish value gap. Just trusting, yeah, not trusting, anticipating that the low of the day or the previous day's low, this engineered sell side liquidity is going to be taken. Inducement of longs, trapping them, reversal to the downside. That's likely also why we didn't see the retracement back into the breaker block, because if we would have seen that, if we would have retraced into this area up here, we would have offered these last trap longs right here from that last push higher, giving them an opportunity to get out at break even, or almost at break even, instead of keeping them trapped up here, making them hope we're going to go back up, crushing their dreams and taking their money. That's how the market works. And market makers know where money is trapped, where volume is trapped. They engineer that. So I hope that makes sense, that if you ever see these very close pushes next to each other, entering on that fifth push usually isn't the best idea. You still have that hope that, okay, bullish order flow can continue right after the open. We've been pushing a lot here. Already gotten in long right here. Well, the potential is always there, but I'd say the probability is lower than right here using this first bullish value gap and this volume imbalance. And then afterwards, no, not so much anymore. It's still worth a try. Would have sorry guys, tried to get in long right here on the high of this fair value gap and close it on that structure shift, which would have only led to a 2.5, let's say 2.5 point loss overall, which isn't too bad, considering that we initially wanted to place our stop loss right here for 3.75 points. But this is already giving it away for me. We could even look at let's look at this on a 30-second, even though I'm not a fan of that, doing this in live market conditions. So you see that on the 30-second, we already got our displacement right here. We had our first, second, third, and fourth push. And then the fifth push right here, displacement, bearish share value gap, but we invalidated it. Took out the short-term high one last time, and then we didn't hold support on any of these bullish share value gaps being left behind. We shift structure and continue lower. Now, the 30-second time frame would have just made it much harder, in my opinion. More confusing. So let's see where we're at right now. Just chopping around, no real interest in that. Damn it. I'm annoyed now that I missed the New York AM session. Alright guys, if you don't have any questions, also on YouTube, feel free to ask me questions. If you have any about this AM session or the New York session overall. During the London session, I took a loss right here on a potential 2022 setup. Where is it? Yeah, right here I entered on that market structure shift, but we just cut right through all the inefficiencies being left behind. That's when I exit the trade. I close the trade right here. Now my stop loss has been hit for 3 points, I think, $150. Then we slowly creeped our way back into that. On the live stream, I just uploaded that to YouTube if you're interested in that. The VIP live stream. I was looking for, yeah, like always, unfilled volume imbalances. If they are there, I want to see if we respect them as some sort of a retracement. Same idea, 3 AM low, induced sell side liquidity. We are starting to retrace. Look for a retracement to the 50%. Look for any interesting PD array. Of course, we could always be wrong and we leave behind a W formation. But that's how we, yeah, closed out the London session at 5 AM. And then actually what happened is we continued lower. And I mentioned this trade idea right here. Post-London kill zone internal 2022 model. So we retrace into this unfilled volume imbalance paired with the bearish share value gap. And we also 1 push, 2 push, 3 pushes, get our displacement with 2 bearish share value gaps. I entered on that lowest bearish share value gap, targeting 5 points, and for price to finally leave that, yeah, ugly choppy London session range. But unfortunately, so right here, take trade on your own risk, just an idea. It invalidated it for me because we closed. Also, yeah, could have given it another chance, but right here at 6 AM New York local time. First of all, what led me to close this trade is we closed above our lowest, my entry, bearish share value gap. And then on that next candle, I see it being used as support, and we close above our highest bearish share value gap. There's no point for me to let it hit my stop loss, because then we clearly swept sell side and we reverse with momentum back to the upside. So at this point in time, I closed my position just to watch it later on. I updated it inside the general chat where we at to see it work out. That really hurt right here. That's why I closed. That's why we reverse. But super choppy price action. We eventually hit the 1 hour fair value gap low and my 2-to-1 risk to reward target. Ouch. What do I see for the crypto market? Let me put up my Google Chrome tab here. The little excursion over to CoinGecko. Bitcoin at 41,800. Bitcoin dominance is sitting at 51%. Do we have a chart with that here on CoinGecko? Yeah, not a very good one. Let me pull it up on TradingView for the end of the live stream here. Equal lows still not taken. Gut feeling rise, I would say. Yeah, I don't know. I don't like to trade power hour. Only if it's really obvious, and I wouldn't say it's super obvious right here. We're like, yeah, consolidating. I wanna, if I engage, it's likely at the extreme, so at the low or high of the current day, and not somewhere in the middle. All right, let's take a quick look at crypto. BTC index. 41,800. Did we hit 42? Yeah, we hit 42. Let's go on the monthly here. I've been looking at this all-time high, 50% level. Use it as a PD array. Make it a logarithmic chart. So it actually makes sense, and we can, yeah, look at price action in a clearer picture. We retraced. 50% is coming in at 42,218, but I don't think we've hit that level, did we? Extend lines right. Status line, open, high, low, close. Let's take a look at that. High coming in at 4,200, 42,130. And our consequent encouragement coming in at 42,235. 42,130. So no, we didn't hit it yet, but we got really close to it. That really has been my target for this entire expansion to the upside. Then of course, the buy side liquidity up here, but eventually we're gonna get a retracement. I'm more interested to see what the dominance is doing. Dominance sitting at 54%. That's awesome, of course. That keeps on rising. That's good for the overall crypto market. Maybe short-term bad for altcoins, but if we see the dominance rising, eventually it's going to go sideways. That's usually when we see altcoins continuing further to the upside. Total crypto total market cap. Very similar to what we did on Bitcoin, but let's look at total free, excluding Bitcoin, ETH, and stablecoins. So if we take all that away and only look at the altcoin market, you can see that the altcoin market is still lagging behind. So if we exclude Bitcoin, Ethereum, and the stablecoins, that's total crypto market cap, only looking at the altcoin. So all your favorite altcoins that you likely have. Right here, still below this, looking at 50% right here. There's so much more room to move to the upside, like in terms of market cap. Back to 50%, that's 70%. So still lots of room to play. And we're only going to see that altcoin move once Bitcoin and Ethereum move. That's always the same cycle. Bitcoin or money moves from altcoins, low caps, into Bitcoin and large caps. And from Bitcoin, that's why the Bitcoin all-time high is at a different point in time to the Ethereum and other altcoin all-time highs. So it's a good thing that we see the Bitcoin's dominance holding above the 50% and continuing higher, now at 54%. 54.28, and it keeps going higher. That's a good sign. Maybe not for the short term for altcoins, but for the long term. Now I'm not looking at the 5-minute time frame here, weekly. One last look at the all-time index. Yeah, but if we look at previous cycles, we did something very similar. So from our all-time high, right here during December 17, to our low, we pre-halving, so the halving happened right June 2020, somewhere around this time right here. That's when the halving happened in 2020. Next halving is happening March, April 2024. So before the halving, in the year before the halving, a little bit earlier, we also hit that 50% level of our all-time high to bear market low. And afterwards we saw, well, a 70% retracement. So if we were to put that into perspective, a 70% retracement would put us below the low. Do I think that's possible? I don't really think so, because we also moved up more in terms of percentages. If we measure from that here to there, that's 350%. And from the low right here to our high, that's only half of what we moved to the upside here. So I'd say we are up much higher. This bear market low compared to this bear market low, so percentage increase is a lot harder to achieve. That's why percentage gain and profit was much easier during earlier bull runs, because during earlier bull runs we moved a total of 10,000%. During the 2017 bull run we moved 2,000%, so that percentage number is decreasing. So if you ever see someone on YouTube saying that we're going to see a 70% drop next because that's what happened in 2020, 2019, that's bullshit. It can't happen. Of course, everything's possible, but 70%, let's say half of that realistic, 35% retracement back into the 30k range. I think that could be likely. Depends. Maybe we get a new virus popping up or a banking crisis whatsoever, like here with this COVID dip. Then immediately has been bought back up. Then we got the halving and the rally started here on a weekly time frame. So I would also look for something similar. We hit that 50%. Maybe we go up a little bit higher to that $48,000 level. Say dip down back to 30k. That's usually where we see FOMO happening around this area. So if your parents or your friends that never heard about crypto and now they're asking you how, well, because you're into crypto, how that stuff is working, usually a good time to not buy and wait. The halving is still, if we measure that out, now we're in December, April, let's do mid-April, still 133 days away from where we're at right now. That's usually, if you follow Plan B on YouTube and Twitter, where bull runs start. Yeah, that's my take on the crypto market. I would look for a retracement, of course. I would my suggestion, if you want to get involved with crypto and you haven't entered the market yet, I would suggest a DCA approach. That's what I did during the entire bear market, slowly DCAing into the bear market, getting an average entry around 20k, below 20k, and that's up nicely so far. That's the best approach to get into crypto, instead of having a specific price level and then it's missing it and then you FOMO in up here. That's terrible. You get in a little bit more expensive and then you add more, you add more, you add more. And if it goes lower, you don't add 100% here, you scale into it. That's what dollar cost averaging or DCA means. It's, in my opinion, the best approach to play the crypto market. And of course some altcoins. My favorite altcoin, I'm gonna put that out there, been holding that for 4 or 5 years now, if not even longer, is the Energy Web token. Do your own research on that. Bitcoin ETFs are coming, and BlackRock They're already looking for, well, they're pushing companies for green proofs, for like green certificates and all that stuff. And if they're bringing out a Bitcoin ETF, it would make sense that Bitcoin is also mined emission-free, green Bitcoin, green proof it's called, and Energy Web Token is already partnering with ETF providers, and it also has already been announced or mentioned by BlackRock Research once. They're already doing that. They're providing, so basically imagine you go to your Binance and you can choose whether you want to buy a regular Bitcoin or a Bitcoin that has been mined 100% emission free. And that's why I really like Energy Web Token. It has huge potential in my opinion. Very undervalued. But do your own research. So, gotta remember not to FOMO though. Yeah, FOMO is the killer. With day trading or long-term holding, gotta remember to not FOMO. 4 years, yeah, I guess even 5 years. It's been a while holding that. It's been a long time. No, but Energy Web Token, man, never selling that back. That's Kraken. So to the 50%, let's go away from the logarithmic chart and take a look at a regular chart. That's where we are at. I wouldn't count in this week. It's a little bit too, but yeah, still. All-time high, $20. Easy. And it's getting picked up more and more from, like, I see it popping up on Twitter more and more from influencers and that stuff. Not that the project needs it. I mean, all I have to show you is if you type in Energy Web, let's for example type in Energy Web staking and see what pops up. Telecom, staking guide for Energy Web, green proof staking. Interesting. Step-by-step Energy Web staking guide from Telecom, not Telegram. And that's just one of their insanely huge company partners. If we take a look at their ecosystem, no, not that. Google, Volkswagen, Protocol Labs, Vodafone, solar panel companies, Shell, California ISO, Energy Peace Partners, Filecoin, Genesis Safe, Australian Institute of Energy, blah blah blah, Engie, Eon, Vodafone, and those are actually the people that back the system. Like, I don't want to shill anything. I love the project. Do your own research if you like it. Invest if you don't like it. Don't. Who cares? Big stuff. All right. One last thing. Sustainable investing is a big thing for BlackRock. So if they ever launch a Bitcoin ETF, to launch a sustainable Bitcoin ETF really set them apart. And now who's offering a solution for a sustainable mined Bitcoin? Well, it's Energy Web. Don't tell me I didn't tell you. And it's still pretty cheap compared to the all-time high if we look at the weekly time frame. Of course, also don't sue me if it goes to zero. We all know crypto is a risky game to play. That's why I like to do my research and really find those undervalued picks. And Energy Web is by far my most favorite one. All right, so let's leave it at that. Go back to ES, still chopping. I think we can call it a recap. We've been streaming for 1 hour. Omar, day trader, unless you have any more questions, can take a look at. Nah, EU just super messy. Didn't like what EU was putting in today. NQ took out the previous week's low. Right here, this red line. Now the previous 2 weeks low actually, right here. If we compare that to ES, this is our previous week's low, and this is our previous week's low here at 4,520. So just to put things into perspective, let me hide the indicator. You can see right now that ES is holding up and that NQ is already to compare it. Look at this low right here at 4,500 on ES. We look at the same low right here on NQ. You can see the difference. It's night and day. We'll see how that ends up. It's NFP week on Friday, so I won't be trading on Friday. On Thursday, I think I consider trading. I don't think we have news coming in tomorrow, so yeah. Okay, there we go. We finally take buy side. What time is it? 15:34. It would have been nice to see equal lows being targeted first, but eventually we target the equal highs right here. All right. Anything on Discord? No worries, guys. You're very welcome. All right. 9:35 p.m. here. I'm gonna head to bed now and get ready for, well, catch some sleep before tomorrow's London session at 8 a.m. my time. All right, guys. Take care and enjoy the rest of your evening. Bye.